My name is Alex Chaya, and I am the developer of the system. I created this software for my own usage and market reading, and I'm always interested in collaborating and hearing about ideas on how to improve it. Most important, I am constantly improving this software. I made this app with the intention of removing noise from my trading decisions. Remove all the flashing lights and useless information that everyone is trying to distract us with. That's why I first want to show you the settings menu. Here, you can define the colors of the system with some predefined schemes, but I strongly suggest the standard one as, at least for me, it's easier on the eyes. The system is currently set up to work with daily time series. There is the possibility of adding more granular data, but of course, this comes at a price tag since this kind of data is very expensive. However, there is no cost for daily settlements. We recommend updating the database by clicking here once a day. Because of the huge amount of data that will be downloaded, this process can take a few minutes. Another important setting is the refresh ratio. Here, I've set to 1 minute. This will refresh the live prices on the program. You can set sub-minute refresh ratio if you like. However, how is that going to help you interpret the markets? Your eyes hardly can capture this, and it will only distract you, especially when making positional trading. Next, the Symbol Manager tab, where you can select all the instruments that you would like to be included in the database and download historical data. We have predefined a few lists to make your journey easier. However, if you would like to view just a particular set of instruments, you can here just checkmark the ones you are interested at. Next, the Market Watch. This tab brings live market data, updated at the ratio you've chosen before. Here you can add any of the instruments you have chosen. But there is something even more interesting that you can do. You can add formulas. Let me show you. Suppose you want to see the ratio between Apple and Microsoft stocks. All you need to do is to enter a PL_DIV_MSFT and click Add Synthetic Symbol. Voila! Now you can monitor the ratio between both. You can do the same as a multiplication. Let's say you want to see the price of gold futures in Swiss francs. All you need to do is to enter GC equals F_MULT _USD CHF equals X. There you go. Now you have it. These tickers I've just used are specific to the data source I have configured. We can connect multiple data sources like IQFeed, Reuters, Bloomberg, and the symbology will change accordingly. There is also the possibility of subtracting, and that would be _SUB_ between the two symbols of interest. The Macro View tab allows me to have a quick vision of the global financial markets and quickly change the yardstick of comparison. I find very helpful to measure returns in terms of gold rather than dollars. Dollars are too bouncy and subject to immense M2 fluctuations. There is something about seeing that the S&P is up 130% over the last 5 years in dollars, but just 25% if measured in gold. That tells me the problem is in the currency. The idea here is to have not only that perspective, but also a sense of how all has evolved in the recent history. Next, the charting app. As simple as it gets. You enter a ticker and you can define a start date, an end date, or just leave it blank and the system will use the entire history in the database. The system will then generate a simple candlestick chart, simply for you to see how the price has evolved in that period of time. Next, a pairs finder. This is to help traders make long and short trades on stocks pairs, currency pairs, or commodities. You first define how many days you want to watch the moving average for. Then define how many standard deviations away from that moving average you are looking at and the level of Cointegration. The system will search all the returns time series in the database and look for pairs that are breaking these levels of Cointegration and standard deviations you defined, and produce a z-score for you to assess the quality of that pair. Just click Search. The system will tell you how many assets are selected, because this will affect the calculation time. The system will then pairwise search for all symbols that match your criteria. After the system finds all the pairs that match your criteria, you can double-click an individual pair to see the chart of the ratio. The chart shows the evolution of the ratio over the past 10 years with the 100-day moving average and the bands showing one standard deviation difference. You can also export the list of pairs to a CSV file for your records. You would be looking for pairs that have a historically consistent ratio that are temporarily trading away from the mean. This tool can be very helpful for long-short strategies in hedge funds. Now I will show you the cross-hedging module. The purpose of this module is to calculate how much of an asset to hedge another. Let's say we are pricing 10-year Treasury futures, but we want to hedge that exposure with 5-year Treasury futures. Both have a notional of $100,000. The correlation is really high, about 96% as we can see in the statistic, and the system outputs the hedging ratio for you. In this case, 1.43, meaning that for every 10-year Treasury futures you have long, you would need to sell 14 5-year Treasury futures to hedge your portfolio. You can calculate a hedge ratio for almost any pair of assets. Of course, this will only make sense for highly correlated instruments and is mostly useful for situations that you have a position in an illiquid instrument and you would like to hedge it in another instrument of higher liquidity. The Forward Pricer is a tool for calculating forward prices on currencies. This tool will scrape the website of central banks for up-to-date interest rates. You can then define days to expiration A to calculate the forward exchange rate, and you can also define days to expiration B, which will calculate a forward-to-forward basis. This is useful for me when pricing futures against later or expiring futures. One of my favorites is the next module, statistics. You choose a ticker and a start date, which is the date you want to go back into the time series for a descriptive analysis. This will give you the descriptive statistics, both for the prices and the returns of the chosen asset. If you prefer visuals than numbers, the plots module will generate statistical graphs. This will plot the autocorrelation and partial autocorrelation functions, a box plot, a time frequency spectrum, an analysis of mean reversion and the half-life of mean reversion, a distribution chart with a normal curve overlay, QQ plot, and standard deviation. I won't go into detail of what each chart means, but I've included an explanation at the bottom of each chart and what you should be looking for. Not less important, the probabilities module. For any asset or portfolio, you can choose a look-back period, a target date, and an approach to calculate probabilities, including a normal distribution, a log normal modeling, or a Monte Carlo simulation using EWMA or GARCH11. This will simulate the probability distribution of your chosen asset at the target date you've chosen. The summary will show you a number in more detail, including an expected price, a price range, and the historical volatility. This is helpful for anyone trying to assess how wild is someone's estimates. The other modules are much more complex and would require an entire webinar to explain each. I will, however, just go quickly through each one. The univariate forecast model allows you to choose an asset or portfolio, and you will understand why I am saying portfolio shortly. A target date for the forecast and the look-back period, as well as the split between training and actual by which you would like to forecast prices. The app not only performs the forecast, but you can see all the quality metrics you would need to evaluate how good is the forecast, as well as a specific forecast for the target date. The models you can choose go from the easy ones, such as autoregressive model, to the most complex ones. For univariate forecasts, you can use neural networks, gradient boost models, random forests, or if you want us to implement any other further, just drop me an email and we will be happy to try. After you find your model, you can export the forecast results to Excel CSV. The multivariate forecast allows you to choose up to 5 assets to train the model. Again, you can use more neural networks, machine learning models, or the traditional time series models. Forecast and export the forecast series to a CSV file. The next module, called Options Prices, is very useful for option market makers, particularly for makers in options that have no liquidity, where the implied volatility is not observable. Choose the underlying asset, the days to expiration, the pricing model, which can be Black-Scholes, binomial, or Saber. Then choose a method to estimate volatility, which can be EWMA, and you can define the lambda or Garch11. The system will calculate the option prices for strikes from 80% to 120% of the at-the-money price, estimating an implied volatility and presenting some important statistics. The delta, of course, but three probabilities. Touch, which is the probability that the markets will touch your strike before expiration. Gap, which is the probability that the markets will jump over your strike completely, which would mean a stop-loss order in the underlying would simply not work. And a whipsaw probability, which would mean the strike is touched and the market doesn't continue but bounces back, which can be destructive for hedge options positions. In essence, this is a tool to understand the real risk of a short option position and a calculator of fair option prices. The portfolio risk module is one of the most useful tools in this system. Here you can add stocks, futures, and spot contracts, enter your position using a minus for short positions, the entry price, and add a symbol to your portfolio. You can then click Save, and this portfolio will load in this app next time. Define the risk-free rate, confidence level, and hit Calculate. The system will then calculate the value at risk, expected shortfall or CVR, the historical volatility, and the beta for each position and the entire portfolio, showing you how much you could lose in 1 day, 10 days, 30 days, 90 days, or 1 year. It also shows you what would the Sharpe ratio of that portfolio have been if it were held in the past, and its alpha. When you finish creating your portfolio, you can save the portfolio as synthetic. This will save the entire time series of that theoretical portfolio as a synthetic asset. So now you can go to other tabs such as plots, and instead of choosing an asset, you type in the word portfolio and do all sorts of statistical analysis, calculations, and forecasts with that entire portfolio, or even simulate positions with long and short entire portfolios. Last but not least, the trading tool, which you can connect to your liquidity provider or exchange, request the order book and place varied order types and create an order log. In the future, we will focus on this part of the tool, as well as producing real-time nowcasts using varied models that we used before. Thank you for watching this explanatory video of the PortaRisk system. Have a great day.